Hey traders, checking in on the stock market today. Bulls were out in full force as the S&P 500 hits all-time highs, as did some individual sectors as well. And we still have tons of volatility in both directions as the FOMO and hype are leaving the electric vehicle space. We're seeing a pullback, and that leads to nice oversold bounces and short opportunities on lower highs as well. We'll check it all out. Stay tuned.
Introducing the Chart Guy's Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So we were watching the S&P 500 futures chart here from yesterday's video, and obviously a big bull break overnight from this falling wedge, which was our daily higher low being established and following through. So we did get all-time highs today, but now that we have broken that falling wedge bullish, what catches my eye? Some bull breaks with a lack of follow-through. So I'm keeping an eye on that resistance line and that support. Now it's a potential rising wedge. So that's something I'm going to be watching for the rest of the week. What do we got? 3 more days? Could see a pullback, set a higher low, bounce around in here for a couple days. That's worth paying attention to. And we'll keep it up over the next couple days. So SPY on the daily time frame, solid bull move, higher low, new short-term line in the sand is 359.17, right above the EMA 12, just like the last time around. And we did break that all-time high, and we also broke the high from extended hours, 366.77. End of the day, we saw a little bit of a pullback, but still an hourly uptrend into the close as there was a bearish reaction to lack of stimulus news. And I'll be watching that 4-hour rising wedge. And the daily higher lows on SPY. That's the most important thing for me, these daily higher lows. If SPY is keeping daily higher lows intact, then the bulls have complete control. If-then statement. IWM, daily inside bar. If it breaks bullish tomorrow, our daily higher low has been established. If it doesn't, then it hasn't. But no red flags on this daily consolidation at this point. Still a lot of space to work with. Still have not even touched the daily 12-period EMA at any point over the last month of trading, essentially. QQQ, new all-time high. So a new line in the sand level here, 294.78 from yesterday, and that was just a monster V-shaped bounce. Dump for an hour yesterday, and then rocket for the next 12 plus hours. Blue sky breakout. Only broke resistance by $1.50, so it's not a convincing break just yet, but it's a break nonetheless. And we'll continue watching the daily higher lows. Financial sector, hourly oversold conditions when looking for a daily higher low. We ended yesterday in that scenario and ended up with a gap up open. Actually opened right at the high of yesterday. So new daily, actually did we change the hourly trend? I'm going to say we didn't change the hourly trend yet. So I'm viewing this as the low of yesterday, the high of today, higher low, lower high, lower low. So we didn't confirm an hourly trend change, which means I'm not confident in this daily higher low of 27.83 until that hourly trend does change bullish. So that's something to keep an eye on as well. If you want it to be a picky bull and protect profits, or an aggressive bear looking short, then breaking 27.83 is a signal that you will act on. But it is notable to me that we didn't confirm an hourly trend change during regular trading hours to indicate the daily higher low has been established. XLV. So remember back here last week where I was saying it's almost a good thing that the XLV bulls are not participating in the S&P 500 strength right now, because that's going to set up for the potential that when the XLV bulls do show up, it can help offset any consolidation in other sectors and only help the broader market bulls. Well, we now saw the bull follow through the last couple of days. A lot of profit taking today, but anything above 107.84 I would call a higher low, and it's now up to the bulls to confirm a daily trend change back in their favor to try and convincingly set a weekly higher low. And actually that's already pretty convincing for a weekly higher low with the follow through we did see today. So bulls showed up. And no red flags on that hourly consolidation that took place most of the day. That weekly level is now our line in the sand. Weekly higher low of 107.84. Biotech bulls, new all-time high as well, but it was just a massive profit-taking day in some names like mRNA. What a day trader that was. 3 gap up, bearish reversal pattern. How's that for a drop? Look at that volume. There is so much dollar volume flying around in these names that are moving double-digit percentages. 26% drop from the high of the day. We had an hourly double top pre-market. High, higher low in pre-market. Right when the bell rings, reject from the high. Actually, we broke the high of pre-market, but only by 40 cents, which is nothing here. And then we drop $48. I played a couple bounces here. It went well. I missed the initial leg down, focused on other things, but once we started getting extreme, started playing some of those bounces, and it's worth watching for a daily higher low. And we did reach first hourly oversold conditions, or we got just above hourly oversold RSI on that pullback. So keeping an eye out for a daily higher low in mRNA over the next couple of days. And the biotech sector, gap up open to all-time highs, closed at the low of the day, seeing a good bit of profit taking on that gap up. Next time we pull back, plenty of space for a daily higher low. EMA12 is our guide. That was a great guide over the last month. Semiconductors, new all-time high. They've been just putting up those all-time highs day after day now for the last bunch of days. How many days in a row? A lot. Wow. 1, 2, 3, 4, 5, 6 all-time highs in a row. Bulls keeping complete control. If I wanted a short-term support level, it's 203.98. But really, anything above 196.67, I would consider a daily high or low. Definitely one of your strongest sectors out there at this point. Solar sector still pulling back, closing near the low of the day. We are looking for a daily high or low, but there's no sign of it happening just yet. Hourly RSI has not gotten to oversold yet. If we were to drop to the daily 12-period EMA support tomorrow, that hourly RSI would be getting oversold. So we're scouting a daily high or low in the solar sector. Electric vehicle names, top is in for now. Look at LI and how much we pulled back. This is how your hype sectors top out. It always happens this way, hard and fast, and before you know it, we're down 20 or 30% from that high. So LI with a big pullback, NIO, big time pullback over the last few days, 20+%. Who else? Plug. So some hype leaving the building, but that being said, NIO, we're zooming out, and we're looking for a weekly higher low to form. We're watching oversold conditions. If we see weakness tomorrow, I'm definitely interested in playing bounces. I would love to see 4-hour oversold conditions with another leg down for me to be confident playing some bounces. We have support levels down here at 42.50 and then 40.55. Those are 2 levels I would be watching tomorrow as well. And the next time we bounce, bears are just watching for hourly lower highs on those bounces. Those are names that I've been day trading. NIO, PLTR, not electric vehicle, Canadian MJ, APHA, and VFF. Look at their daily volatility. Rocket ship up, and then a double-digit percentage drop. APHA, that was it. VFF, same thing. Tons of volatility for day trading out there in these markets. So tomorrow, I'm off on a tangent now, but tomorrow I'm watching for bounces and for daily higher lows on VFF and APHA, mRNA, watching for a bounce on NIO. And if all of those names open higher, my game plan completely shifts. And I then start looking bearish for hourly lower highs. So that's why I don't do a whole lot of preparation. Doing these market videos at the end of the day definitely helps me get a grasp of where everything stands. I check in on everything in the morning. I check in on how everything ended at the end of the day. But as far as establishing game plans, I have a rough game plan. But I know that once I wake up tomorrow morning, things could look 2 completely different ways. So most of the trading preparation is actually done in the morning, and that's why I'm on the computer for a solid 2 hours before the market even opens, with some breaks in between. The VIX. So the VIX, we got our support line. We got rid of the resistance line because we opened above it and then fell back below it, but this support line is definitely still in play, and here we are bouncing off of it again. 1950 was the low. We held 1950. 2290 is the most important resistance level, and just tightening up at this point, but this downtrend support line still coming into play and still valid at this point. And again, a lot of people will look at this and say, why is the VIX green when the market was so strong? And the answer for me is always hedging. Bulls hedging long-term portfolios, looking to grab a little bit of volatility. The dollar is dumping. We know it's been weak. There is no sign of any bull follow through. The 4-hour bounce, we knew we had to change the trend for it to mean anything, and we just fell right back down to lower lows. Daily RSI back to oversold, 91 psychological support, and all about 88.25, the most important level, the lowest price that we have seen in the last 6 years, is the level for the next few months. Gold finally getting a bounce going, and there were significant bounces in the metals. And if you've been watching these videos the last few days, who gave us the clues? The miners did, and we could see very clearly there were clues in the miners to end last week. We dropped to lower lows on metals by multiple percent every day, and the miners did not do that. They held their lows, and they closed at the high of the day the last 2 days, Wednesday and Friday last week. And there's your follow through. As far as gold is concerned, anything under 1880 is a daily lower high. The bulls are hoping for enough daily bounce for us to be creating the space for a daily trend change to take place. Aggressive bulls are already entering into weakness, daily oversold conditions. Patient bulls are waiting for this bounce to top out, and then they're looking for an entry on that higher low. Silver was just a beast. Much bigger bounce. Silver is pretty much a leveraged version of gold, where it goes up faster and it drops down faster as well as far as percentage moves. Anything under 24.53 is just a daily lower high, but there is tons of space for a higher low, and the biggest difference between gold and silver is a double bottom. 21.66 and 21.89 or 90 held support, while gold clearly dropped to a lower low. That's a notable difference, and in my opinion, that gives the bulls extra confidence to have that level to be going off of. Look at this hourly time frame on silver today. We had an hourly lower high, higher low tightening range, and it broke bullish, and the bulls just did not look back. And that reminds me instantly of another chart where the same thing happened recently, and that's Bitcoin. Just looking at the 4-hour time frame, different time frame, but same thing. There's your dump. There's establishing the range, equilibrium, tightening up, and then the bulls just didn't look back. V-shaped recovery right back to the high. So we didn't get right back to the high, but it's very similar in that regard. Why does that matter? That's just an example of having a library of memory in your brain where you see things time and time and time again, and you want to have that recall and say, okay, I've seen this pattern. This is how it played out in the past, and I know roughly the probability. Does it play out often? Does it fail often? And this is just another one. Put it in the file. I've got a file of dump into equilibriums, into V-shaped recoveries, and silver hourly and Bitcoin 4-hour time frame are now both in that file for recall at some point in the future to utilize the past experience and things that we learned from staring at these charts all day. We don't want to just flush them out at the end of every day. Got to retain some of that. So the miners, 36.36 is a short-term resistance level on GDX. And same thing, I don't consider a daily trend change having taken place yet. So we will need the clear higher low and higher high, but obviously a significant move off of that low. At this point, we bounced almost 10%, which means the leveraged versions. Let's see our low down there, 59.60, and we're up, so 15% bounce. Nothing to sneeze at. Oil broke the low of consolidation. It's still a potential daily bull flag, but just barely. We would have to see the bulls significantly regain momentum. There's a very clear resistance zone up here at 45.71, 80, and 70. A little triple top right there, and then we rolled over. Not a ton of bear follow through at this point, but the inventory report tomorrow is either going to dictate, yes, a daily bull flag and heading back to resistance, or nope, not a daily bull flag, still looking for a higher low, but more significant pullback. Natural gas. So sideways, have to get more follow through. If we were to fall down and break 2678 from here, it would be a red flag. We have to hold that level and follow through with this daily bull flag that broke bullish yesterday, but a lack of follow through at the moment. So that's keeping bulls a little bit uncomfortable as long as that is the case. Let's see if I can think of a trade off the top of my head that I took today. There were a lot of them. A lot of scalps and flips. Took 3 trades while live trading. Had a winner, two winners, 1 loser. APHA, that wasn't notable. No, nothing standing out. A lot of back and forth. Just still racking up the volatility. And my mindset the past few days is just lock in the trade and then move on to the next trade. Because they are everywhere. And I'm just sticking with those few names. And that gives me all the volatility that I need. Eventually, when the electric vehicle sector is going to equilibrium up at some point and just see tightening ranges. Right now we're in range discovery. The massive bull move up, now the most significant weakness that we've seen in a couple months, and eventually we'll just start being range bound. How do I know that? Because that's the way markets work. Remember the gambling names? Look at Penn. Huge move up, breakout, crazy volatility, and now we're just watching volatility tighten up. Big ranges, double top at the all-time high. We're going to look for a higher low, and we're going to trade, and that's when we stop actively trading as aggressively, day trading, as ranges tighten up. So I know that we're going to see that happen in the electric vehicle space eventually. It's not happening yet, but say we get a big pullback and then a big bounce, and then we look for the range to tighten, and during this, I go and find other trades to take. I traded here, and I don't trade it once we get there. So striking while the opportunity presents itself for volatility, but knowing that it will be short-lived. And then we'll move on to the next place where the volatility reigns supreme. Have a good rest of your day. Do good things. We'll see you tomorrow.